Hey, welcome to the video on lesson 5.3. We're going to discuss dishonored checks and electronic banking. The objectives are complete record keeping for a dishonored check, journalize an electronic funds transfer, and journalize a debit card transaction. So, recording a dishonored check on a check stub. A check that a bank refuses to pay is called a dishonored check. So, if a customer comes in and writes a check, that check did not have enough money in the account to clear it. Sometimes the bank will pay it, sometimes they won't. So when they don't pay it, that's a dishonored check. So a check dishonored by the bank because of insufficient funds in an account of the maker of the check. That's called a non-sufficient funds check. They're also known as an NSF check. So to record it on the check stub, because we've already deposited it into our account, we now have to take that back out of our account. So we're going to write dishonored check under other. We're going to write the total of the dishonored check plus the service fee, because yes, unfortunately the bank is going to charge us a fee because somebody bounced a check with us. Then we calculate and record our new subtotal. So we're going to subtract that from the previous subtotal. So that person now owes us money. Okay. Not only are we going to charge them for the money they originally paid us, but also for the fee that we have to pay. Okay. So we're going to receive notice from the bank of a dishonored check from Valley Landscaping, $185 plus a $40 fee, totaling $225, memorandum number 52. So that is now becomes an account receivable. So we're going to increase how much Valley Landscaping owes us by a debit to accounts receivable. And we're going to take it out of our cash and we're going to record a capital or credit to cash for $225. So then we go to our general journal. We're going to write the date in the date column. We're going to write the debit account on the first line, followed by the debit amount. On the next line, we're going to indent a little bit, write the credit, in this case cash. And then we're going to record the credit amount in the credit column. And then the last thing we do is write the document number in the document number column. Then we would post it just like we would any other transaction. Now, electronic funds transfer, a computerized cash payment system that transfers funds without the use of a check, currency, or other paper, is called electronic funds transfer. So we go online, we pay the bill online. Okay. So we paid cash for on account to Murnack Enterprises, $380 using EFT memorandum number 18. So we now owe less to that company, so we're going to reduce our accounts payable with a debit. We paid cash, so we're going to decrease our cash with a credit. Okay, so we're going to record the date just like normal. We're going to record the debit transaction. So we got accounts payable to Murnack Enterprises, a debit $380. On the next line, we're going to indent and write the the credit amount, account. So here cash and the credit amount of $380. We're going to write the source document in the source document column. Then again, we would post. Okay. Now, a debit card transaction. A debit card is a bank card that automatically deducts the amount of a purchase from the checking account of the cardholder. Okay, it's just like a credit card, except instead of owing that money in the future, you now take it directly out of your checking account. Okay, so we purchased supplies, $75, using a debit card, memorandum number 21. So again, we bought supplies, so that asset is going to increase with a debit. We paid cash, so that asset is going to decrease with a credit. And then we just journal like we normally do. So we write the date in the date column. We write the debit account title and the debit amount on the first line. The second line we indent, we write the credit account, in this case cash, and the credit amount. And then the last thing we do is we write the source document M21 in the document number column.